everybody. Happy Friday. We are back in full effect. We was out doing big things last Friday, so we couldn't hop on, but we are back in California, back in our place, our temples, and we are ready to break it down on this Friday. So as the per usual, what's up, gentlemen? I got my amigos. How y'all doing?
Feeling great, man. Feeling great. Feeling great. Happy to be back in Cali.
No, I'm pumped. I was about to say, back to be back to the house, man. Looking forward to hopping in here. M's, you know how we do every single week. So I missed you guys. Happy to be back.
I know, right? I know. It's a whole vibe. I saw Glenn yesterday. I told him I missed him like 13 times. I feel like I haven't seen you in forever.
Yo,
But per the usual, hey guys, as we start, please, if you have questions, comments, the things that you like that we're saying, maybe the things you don't agree with what we're saying, please put it in the comments on whatever platform you happen to be on because we can't see it. We'll put it on the screen. We'll talk about it. We'll give feedback, whatever. But at the end of the day, this is for you guys. So at the end of the day, we want you to be as interactive as absolutely possible. So as we get started, as I pull up the first article, Glenn, since you this week are the man with the plan, why don't you tell us a little bit? Let's see, we're gonna do the BlackRock article first. So give us a little why you chose this one and how you feel about it.
Yeah. So recently I have
Hold up.
been hearing a lot of people. Oh,
Time, let's say one thing. I'm sorry, guys. I had to do this. Guys, I want to let you know just
no, absolutely.
Oh
okay?
yeah.
Yes, thank you.
Just for a disclaimer, guys, I want to let you guys know that first and foremost, all of us here, right? We go in and we do our due diligence. We all investigate, right? We're here to just provide you guys with the value, some education, right? Point you in the right direction. But in no means, shape, or form is this information meant to be drawn upon or acted upon directly without your own due diligence. So just disclaimer, let you know, go out and research, right? Focus in, lock in, get your own information. We'll help you kind of guide you, but at the end of the day, we are not telling you to do the things that what we're suggesting or any of the actions linked to directly investing. So just want to please continue going.
Rico,
Hey,
I appreciate that. We always want to make sure that we put that disclaimer. But
sorry,
yeah,
Rico, baby. All right, here you
yes,
go, Glenn. The floor is yours.
everybody that's kind of tuning in, appreciate you guys tuning in to Financial Fridays. With this, so with the first article, BlackRock, recently, man, like just conversations in the business, outside of the business, um, I've been talking about BlackRock, but I also been hearing even more about BlackRock, right? And so I thought it was important to kind of to highlight this article over this past week, right? It talks about the BlackRock. Number one, for those that are not aware what BlackRock is, it's the world's largest asset manager, right? But in this article, it says, central banks are deliberately causing recessions and warns of a downturn unlike any other. And then it talks about three shock-proof assets for your protection. And right, so kind of diving into this, I was reading. There was also another article about Jeff Bezos talking about rethinking buying new cars, refrigerators, and different things like that. And so for me, when I was kind of reading that, tying that into this here, as we talk about the stock market, for me it was almost like a no-brainer. Like based off of what's going on across the economy, number one, individuals need to be a little bit more. Not just deliberate, but they need to be more in tune on what they're doing with their finances, right? Just kind of looking at that. But in this article specifically, I dove in talking about how Americans, 40% more are paying on home insurance compared to just 12 years ago, right? And so why is all of that important? Because there's so many people that are investing in stocks. There's so many people that know about stocks or not or don't know enough. And so this was highlighting a few things, right? Because all these play a factor into the stock market, right? And in this article, it talked about how 12%. I'm sorry, just going into just this first quarter, right? We're diving into February. The S&P is already up 9%.
Mhm.
Right. However, on the flip side of that, the downside risk could be much bigger. And so I thought it was important to kind of highlight that piece of it. And so when you talk about solutions, people, it's important for them to find financial vehicles that protect them from the downside, right? So whether it's the index accounts, whether it's annuities, whether it's based off of this particular article, consumer staples, right? Something that people will never go away from is food and drinks, right? It talked about household goods. These are things that are in the home, right? Something I found interesting in this article when it talked about the as far as investing in wine, right? And so when I read that, I was just like, you can look at that from two different perspectives. Number one, you can look at it from an enjoyment perspective, like, hey, I'm just going to buy wine down for the week and kind of enjoy it, or look at it from an investment standpoint, and investing in wine, right? And so something that I'm now kind of looking into that kind of piqued my interest. It said the I believe they're called Sotheby's fine wine index since 2005 is up 316%.
Yeah.
So right there, I was just like, hey, this is something that I'm going to be looking into. And as far as the solution, looking at investing in wine specifically, and I didn't know LeBron James was doing this specifically, investment grade wine. So, and then obviously a lot of people are always talking about real estate, and so that kind of as well. And again, I thought it was important to bring it to the table here. And so there you have it. That's why I kind of selected this particular article.
Okay. So I like it first. And that's something that a lot of people are starting to look at, right? It's like, what are these things that we lightweight took for granted that are now becoming valuable assets to hold on for extended amounts of time? I heard Kevin O'Leary talking about like Rolexes, how there are, certain watch companies around the world that have 2-year waiting lists. Like you have to write them an essay like you're in college telling them why you should be able to own one of their watches, because people are investing in them right now because, they're made out of precious metals and diamonds and things like that. Like we talk about with Jeremiah, those the things at the bottom to help build the top things, right? Those commodities, like those essential things. And so I think with what's going on in 2023, people are looking more at like, well, what are the things that are building these other things that we're buying? Because those are the things that are going to be most valuable, right? So I know Jeremiah got something to say.
No, I was just letting you guys finish, man. It's good, you guys. The cultivation. I feel like I talk too much most times, so I'm Mr. Quiet this episode. What I would say is, number one, as I'm reading over this, there were no surprises there. BlackRock's going to feel that way. BlackRock make their own decisions. They were negative 34% last year based on their positions that they took, on wave that they took, environmental safety stuff, the environmental. So, for me, it's like you can say what you want. You kind of BlackRock did. That's neither here nor there. But what I will say is this: if you're not focusing on things that are basically recession-proof, pandemic-proof, right? All of these things that are occurring with the list that they gave, the consumable goods, like they said, Tropicana orange juice, Scott's toilet paper, all these different things. Those are things that are always be there. These are things that are always purchased, right? Now, if you're looking for like huge spikes in their numbers or anything like that, no, not so much, right? But they're always going to be there. It is, I don't know if I too much agree with that one, but it's fine. It's there for you to get. Like Glenn said, the most interesting one is I have been. It's a crazy story, real quickly. Probably about to go. Somebody came to me 3 or 2 years ago, pre-pandemic. Somebody knew about a whiskey offer, and it was investing in whiskey, right? And at that moment, at the time, I had investigating it more. Now, bring it to current day and time. I was just reading an article today about Jay-Z and about this whole Bacardi thing with him and Bacardi, his cognac, which is Douce. Douce, based upon his name and the branding, it outdid basically the Kager. If you know about investing, it outdid the Kager by 30% on the actual comparable brands, right?
Oh,
so this is stuff to think about. People are gonna celebrate. All right, so these are just things to think about. And as you maybe if you go into the pandemic, there's maybe a little bit, right? Recession wise, there's more, unfortunately. But these are just things to think. I think that was a good point.
Love it, love it, love it.
I like it. All right. So we'll move on to article number 2, which will be the January jobs one. Let me pull it up for us.
Oh, the jobs. Yeah.
Yep.
So,
So
go ahead.
break it down for us, Glenn. What was your what was your intent?
So with this one, I remember a couple months ago, we had a conversation on, as we were closing out 22, on so many jobs, so many people losing their jobs, right? Even actually just a month ago as well, there were more people losing their jobs. There was articles about individuals, projected the next couple months, $176,000 jobs being removed. And so this one kind of piqued my interest because on the counter side to that, it talked about how U.S. economy adds 517,000 jobs in just January, right? So when you talk about the unemployment rate, the rate falls to 3.4%. And so the reason why I chose this one is because this is an article that affects so many people, right? Whether you're on the losing your job tail end of it, or if you're in need of a job and you're searching for it to kind of see if there's hope. Right. And so I wanted to kind of give an update because, like I said, we talked about that previously. And, in this article, it talked about how U.S. jobs blew past expectations of the first month of this actual year.
Yep.
And so, again, just kind of going back to people having hope, while the average hourly earning rose only 0.3%, it's still, it's still a point there. And then the other piece to that I want to highlight is, during the pandemic or prior to the pandemic, there were two industries that were hugely affected by the pandemic, and it was the leisure industry and the hospitality industry. And so just this past month, they added 128,000 new jobs just this past month, but they still remain 495,000 jobs short from prior to the pandemic. Right. So there's still some forward movement. However, there is people have to realize that there's still a huge hole that needs to be filled. And so, like I said, I wanted to bring this to the table because of the impact it has on the United States.
I like it. And that's something, I think we didn't talk about it, but I'm sure we all saw the article where it was talking about people losing jobs about to be ridiculous, almost over a month. So this kind of goes back to that last article where it talked about hey, the economy went up 9%, but we're not out of it. It's the first month, right? So I would almost say that this might be one of those exact same moments with jobs. Oh, never mind, jobs is great. Unemployment is lower than we thought. And it's no, bro, this is just a precursor to what's potentially to come, right? Don't be fooled.
Yeah.
Yep.
That was
what
it.
You got, Jeremiah?
I feel like that, also there's something else to think about with normally inside of a recession, right? Or inside of an economy, look at the unemployment rate, and it's a good indication how healthy that economy is, right? So you look at a lower unemployment rate, what you're thinking is that the economy is very healthy. Now, in a situation where you have high inflation and you have a low unemployment rate, right? Or the unemployment rate is lowering, what ends up happening with these cases is the wages of people that are in demand, those wages are increasing. What does that do? That keeps the prices of consumable goods and all the things that are moving throughout the economy at an increased rate, which means that the people that have lost their job and the rest of the economy, right, they're not able to afford goods and things. So it actually is contradictory to lowering the inflation rate. So that's the issue that we're in right now. It's in a place where we still have super high inflation and the unemployment rate is low, which means that the people being hired need more, and it just continues that inflation rate. Ties to what BlackRock was saying. They're saying we're seeing all of these, opposites occurring at the exact same time. So inflation ends up becoming stagflation, right? And you can't move either place because either way pushes you further in the wrong direction. So that's kind of what it's looking like to me.
Yeah, I think I look at it too from this is like the coach aspect, right? Is yeah, the unemployment's rate, but it's because people don't want to leave their jobs because it's hard out there, right? So me, like in my coaching leadership brain, I'm like, man, it really sucks. There's probably a lot of people sitting in jobs they don't even want to be at, only because inflation is so high and it's really hard for some people to get a job right now.
Yeah,
you know, especially with all the tech layoffs.
Yeah. I mean, that's true. I mean, that's just even prior to the pandemic, you had so many people that even still to this day, but prior to the pandemic, you have people that were doing jobs or do jobs that they have absolutely no desire and love to do. And so they go in, Sunday rolls around and they're dreading going into work on Monday and they're looking forward to Friday just to rinse and repeat. So, yeah.
Exactly. No, but that is crazy. Like, I think, like we talked about, like these two articles, I really appreciate these, Glenn, because I think it really encapsulates kind of that don't be fooled by the numbers mindset, right? Like, and that's what we're all about here. We're all about like the education piece of it. Like, hey, I know it looks really nice when it comes in on your Yahoo Finance app, but be informed of what's actually behind the scenes, right? Like what does this actually mean for you? Like the negative, the positive, and so forth. And so, shout out to you, man, because I really feel like these kind of really encapsulate what we talk about on this show.
Yeah, and I want to kind of add something to what you were just saying, right? And so to everyone that's kind of watching this video, while we're kind of giving some of the highlighted points and kind of sharing our perspective on it, do your due diligence and do your own research, because again, as you have one article, it says that we're hurting for jobs in the economy. And on the flip side of that, you have on the opposite end of that, like, hey, we've just poured out these many jobs, and so it's kind of like a yin yang. And so what you don't want to be is be tossed around left and right. Right. Because your family matters, like, especially if you're a leader of your household. And so I wanted to add that to it. Like I said, if you're watching this, do your due diligence and read up on this stuff.
Yep. Agreed. So our last article for the day, Glenn always coming with that AI, boy.
Yeah. So I mentioned this a couple Fridays ago. The thing that really sparked my interest with the AI was when we had a guest on the podcast that was his lane, and like I learned a lot during that. So I started doing my own research, and so that was one reason why I wanted to bring this to the table. The other piece, I know the last 2 weeks I've been hearing Rico and Cam talk about ChatGPT. So I was like, hey, this is the best of both worlds. Let's bring it up and talk about it. But artificial intelligence is said to be right now the hottest topic on Wall Street, right? And so from an investor standpoint, they're looking at ways of how they can capitalize that, right? And so from a business aspect, how I'm looking at it is that in the years to come, like businesses are actually looking at ways on how they can scale their business, right? How they can improve on processes within their business. And so AI is now, becoming more and more popular to where businesses or entrepreneurs or execs are actually looking at how can we scale our business? How can we incorporate AI into this to make it more efficient and effective, right? And so I thought this was important because obviously, from an investor standpoint, folks that are looking to invest in the stock market or AI specifically. I know in this article it talked about C3.ai, and for those that don't know, their clients are generally the three that kind of stood out was Bank of America, Shell, and 3M, right? And so just looking at that, if you invested into C3.ai, already in the beginning of this year, they've already skyrocketed over 100% year to date as far as growth. Right. And so something else that kind of stood out in the article, many people obviously know who Mark Zuckerberg is, but even from that, right. So people know him, they know about Meta, they know about Facebook and Instagram and all that. And so now you have CEOs looking at how can I implement or deploy AI tools to help our engineers to be more productive. Right. So that's specifically what Mark Zuckerberg and other CEOs alike are looking at. So that really piqued my interest because on my end, I'm already like, okay, in our business, how can I incorporate AI? Now, on the other side of that, we have to be very, very careful on executing AI and placing AI into every single thing because there still needs some there still needs to be some type of human and emotional aspect to decision making, especially in leadership positions. So
yeah.
that was my
and I'm spent. No, I mean, you're right. When I was, so this morning, that last point you made, as far as there still has to be kind of this like human like capability, right? They were talking about that on LinkedIn. One of the recruiters that I know was talking about that is, you know, with everything AI is doing right now and how fast it's moving, do you guys believe AI will take part in the recruiting arena, right? And that was one of the major questions, is like, at what point, because a lot of applicants have said they have problems sometimes with recruiters not getting back to them, right? So it's like, hey, if we integrated AI in this process, how could that help, you know, the applicant feel better? How could it help the recruiter? How could it help the businesses or corporations who are hiring people maybe to have less man hours, as far as, you know, tapping in with the applicants and things like that? So it's crazy, man. I mean, Chat GPT has completely changed the landscape, all in what, a month and a half now? Because now there's all these other things that use Chat GPT and so forth. Like I was telling Glenn Jeremiah that the PowerPoint AI thing that we use, that's just the back end connection to Chat GPT. That's all it is. Like I was looking at the picture because the picture looked all weird, and then I clicked on it and it was like, submit a different query to DALL-E. And I was like, oh my God, making money off a free service. What am I doing with my life? And so, but you're right, man.
Rico, what's your thoughts, man?
Like he's like, yo,
his wheels are turning.
Yeah, his wheels are turning.
Well, you know, for me, I don't. We give away a whole bunch of game, but I don't give everything away, right? So what I'll say is that I definitely know that specifically, what is it, Tome? They use it. And there's all these different, and it's just more things. What I will challenge people to do is you know, think of something that could be created inside of your business if you have a business you can elevate, right? And something that takes like the pain of your business. So just delegate that GPT. If you don't like creating, you know, business models, there's so many different things that has the capability of doing. Like I said before, I actually had it write a code for me, right? And so I got that code, and
Nope.
Did I freeze or did you guys freeze?
No, that's Rico.
Rico? Got you.
We gotta buy like a satellite thing.
But I get what you're saying, though, Rico.
You know what that was? That was the program telling Rico to stop giving away so much game. That's exactly what it was.
Hey guys, if you have questions, you know, obviously when we do these Financial Fridays, love to hear your input. Would definitely love to hear your input, ask any questions. You know, I am blessed to be surrounded by these two great minds, these two masterminds. And so when it comes to, you know, what's going on in the market, you know, we have one simple goal, and that's to provide value any way we can to our community and all that. So,
oh yeah. So now that we got through the article, so some of the things like we talk about as far as like doing your own due diligence, right? Like that's just not for what's going on in the market, but honestly, that's for a lot of things that you may already have access to, right? So like if you have a job and you have a 401k, learn about your 401k.
yes.
What goes into it? How is it invested? Well, you know, all those types of things. Is it equities? Is it commodities? Is it bonds? What is it attached to? You know, if you have savings accounts, high yields and things like that, learn about it. How does it work? Is it quarterly? Is it annual? So, you know, don't just think that, because it can be overwhelming, right? When we talk about these things and diving into Yahoo Finance and stuff like that, you know, take advantage of the tools that you already have at your disposal and learn about them and maybe how you can leverage them even more for your future.
Yes, yes.
But yeah, man. I mean, I like the articles today, man. They were good. I think they definitely talk a lot to what we've been talking about between the three of us. You know, AI especially. I feel like I talk about that every day.
More to come with the AI.
Oh, for sure. But yeah, I mean, do you what kind of lasting comments do you guys have?
Okay, Rico, you want to go? Okay, no worries, no worries. I think his computer's freezing.
Yeah.
Yeah, so for everyone that's tuning in, or if you're re-looking at this video, we appreciate you guys clicking on. Hopefully you found this of value. Like I said earlier, do your due diligence, dive into your research, you know, reach out to people who are experts in that field, right? So like I said, we got these two fine young gentlemen. One has gray hair, one doesn't. No, I'm just kidding. But anyway, just very grateful for each and every one of you guys tuning in today. Expect us to continue to do our commitment on our side to keep pouring information and reading and learning so that we can continue to share this to our community. Please share, like, and come back next Friday too. Look forward to sharing some more articles. So that's all I have, Cam. I appreciate you guys having me on. Rico, always a pleasure.
We'll see y'all later.